You're watching Stock Watch this week. I'm Zinati Guma, and joining me to unpack your stock-related questions today via Zoom is David Shapiro from Sasfin Securities and Devin Shutte from the Rebay Group. Be sure to send your questions through via email to stockwatch@bdtv.co.za, via SMS on 41392 or on X @BusinessDayTV using the hashtag StockWatch. Thank you so much for your time, gents. A lot of interesting questions that we have today. I'm just trying to think if there are any macroeconomic. There aren't any. Yeah, David?
Last night, the President of the United States told you to buy.
Again?
You missed that.
Again?
Coming from the highest office in the world, you know, he told us it's time to buy stocks. So,
and that's the second time in a month.
Yeah. If you didn't buy it the first time, this is the second time. It's the whole time, yeah. So I must admit, I was just finished, just bowled over by that. I said, "This is the President of the United States." You know, he's acting like what's it from one of these penny stock pushes, you know.
Oh, anyway, my goodness!
You want to know the macro?
No one on this show, yeah.
that is interesting. But I mean, Devin, would that maybe signal that Trump sees an end and a positive outcome out of the talks with China tomorrow?
Yeah, potentially. I think you get the feeling just this week that kind of the panic around the tariffs is receding just a little bit. I think the UK deal, although that was pretty opaque and thin in details, I think that's kind of a step in the right direction. And I think the market could be anticipating that there's just some clarity coming out from their meeting in Switzerland between the US and China. I mean, to my mind, it can't get any worse than the level of tariffs that they've imposed on China at the moment. So any reduction is likely to be viewed positively, and I think that's why you're seeing kind of risk sentiment bubble up today, gold a bit lower. So we'll wait and see how that plays out.
Yeah.
What they have said now is the headlines coming through is that they're going to reduce China's tariffs to below 60% even before the talks. So
from 145.
From there, yeah. So this is the desperation that Trump finds himself in. And as Devin alluded to, the deal with the UK, I think, is very flimsy. There's no detail. They haven't put anything. So I think what this is signaling is, that he's caused a mess. He's trying to unscramble that egg, and it's not easy. And there are a lot more deals coming. In the meantime, there's been enormous pressure on him by business leaders and business people to roll back, as we're seeing now. So it's a process, and there's still some stuff, that he can't roll back that quickly, which we'll see coming in results. But I think last night, when he tells you to buy shares, he's desperate. He needs the market up for his own rating. So that's where we are, macro level,
You know what, David? I think you should stay there in New York, and we'll hire you as our US correspondent. How about that?
I watched every morning. I used to watch the local news before I went on, and I loved it because they would interview people every day. And businesses like party companies, for Halloween and all those businesses, bicycle businesses, really decent, all of whom import from China and are going to be finished out of business. So there's a lot of pressure on him. You can't get a hotel in Washington because of businessmen coming down there and lobbying, for their own businesses. So
all right.
Anyway, that's why I'm saying, if he says buy, just buy.
Yeah, just buy. Yeah, just buy. Yeah, we know what happened post-Liberation Day. Devin, I want to bring it back home and talking about leadership. Leadership change is actually happening at Old Mutual. And actually, I don't know when was the last time we saw this, where a share moves so much due to a leadership change. It was up 9%, that share. So Ian Williamson is retiring this year, and Yuri Stradom is taking over. How happy should Yuri be at this point?
I don't know. I don't know. I mean, Yuri must be very thrilled, but obviously there are people who know a lot more. I thought Ian Williamson was a very safe pair of hands and was doing a decent job of a company that has kind of lost its way over the last 20, 25 odd years and is still trying to find its way through. Whether this might have something to do with the bank or some of the new issues that Ian has introduced, I don't know. But it's been a straggler. I think it's certainly underperformed Sanlam and some of the other companies in that area, MTM, not N, but I mean Metropolitan and Momentum, sorry. But I don't know. This is a massive business with a massive client base that's been around for, well over 150 years. So there's a lot of upside if it can get things right. Let's discount the SA economy, which is also a bit of an impediment.
Yeah, well, David talks about the banking prospects for Old Mutual. And actually, the viewer question goes, your view on Old Mutual, is this a buy on the banking side of this business? Would you be banking on Old Mutual because of the bank, Devin?
Of the bank. Yeah, I'm not sure if I would bank on their bank, but I think the trend in the market has been towards these insurers and banks teaming up. We see Standard Bank and Liberty, we see Discovery and their internal bank there. So clearly it's an aspirational place for these insurers to go. Yeah, I mean, I think a lot will come down to execution. I think to a degree, Old Mutual has also been hamstrung by some of their kind of legacy tech systems. They're in the process of a digital rollout and closing that out. So I think for a business of that scale, I think that can definitely introduce a lot of efficiencies and profitability that can flow through from that. But yeah, Dave's right. I mean, this is an enormous business, huge amounts of premium and assets sitting there. And if we have a buoyant local market where a lot of that is invested, that's also going to bode positively for them. So yeah, not overly exciting. I mean, the bank, I'll still wait to see how they implement it. Yeah. But I think potentially there's some upside to this, and yeah, maybe the new leadership will help usher that in.
Yeah.
No, I stuck my neck out when they announced the bank. And I've been criticized for it or rather ridiculed for it. Because if you understand their client base, it's very broad spread and it's probably at the lower end of the market. And that gives them a chance to take on someone like Capitec. Although I think Capitec is so far ahead. It's such a brilliant operation. It's going to take a lot to do it. But what I'm trying to illustrate is the difference between Old Mutual going into banking and, say, Discovery. Old Mutual's got the client base there.
Yeah.
Those people who need the banking and can be addressed. Whereas with Discovery, it was, okay, let's steal customers from Investec or let's steal customers from Standard Bank and so on. Yeah. This, I think they've got, the market is there. It's up to them. Devin used the word execution. It's up to them to actually be able to execute the strategy.
It's quite interesting.
We've got through half the show on Old Mutual.
It's quite interesting because a lot of people have been asking if Capitec should be shaking in its boots, and that's due to Old Mutual Bank, but also African Bank that is due to be listed, I think, in 2027. But yeah, no, Capitec is remaining solid. I'll let this question hang. I'm not going into this. Someone was talking about Old Mutual. They're asking, is it not time for Chairman Trevor Manuel to take automatic resignation also? I'll leave that hanging. We're not going into that.
Thank you.
Let's go into, as we're talking about the lower end of the market, there's a question on Boxer. Are you bullish on Boxer results due to be released on Monday? Should I buy some today before the results? Devin?
Wow, look, I don't know if you should be buying them ahead of results. We just don't know. But if you look at the company, there's a lot to like. I mean, they've managed to grow sales significantly, and I think where their real standout is on their resilient profit margins. I mean, those are sitting at around 5%, which in that segment of the market is just incredible. Strong return on invested capital, and also a strong store pipeline. So there's a growth story here, which is quite hard to come by in the South African local environment. And yeah, I mean, we'll obviously get details from the results as a standalone entity, but yeah, definitely one to watch. Okay. And I think one that you can definitely look at. I just have no idea what the results are going to be.
Yeah, indeed.
If you're talking about a 5% margin, can you imagine what Pick n Pay's margin is?
Yeah.
It must be -5. I mean, because before they unbundled Boxer, they were low. So Boxer's been holding up Pick n Pay for a long time. I know Pick n Pay is going to use Boxer probably as an ATM every time they need money, sell off some more shares. But I like this. I think it's at this end of the market, very well run business. We're only learning about it now because the results have been hidden before. Yeah. So we don't know much. We've got no real history to go back on. Boxer.
David, talking about history, because another viewer said Boxer versus ShopRite, which has a better return, 3 to 5 years. More history on ShopRite, less on Boxer. What do you pick?
You've got to go with the winners, and I think ShopRite's a winner. And I think I like Boxer, but I still think that if it came to putting money down, I'd say, okay, I know who ShopRite are. Yeah. I know management. They prove themselves, and I would probably stick with him. First of all, we need, all of this is said with a health warning. We need a decent economy to give these companies the scope in which to grow. It's very difficult at the moment. But these are, ShopRite is a very well-run operation. So I would still go with it. And you know what? Look at Capitec. Everybody, it's too expensive. Not going to buy it. Oh, it's too expensive, and it just keeps going up. And they just knock the competitors out the park. So I think ShopRite's still that kind of business, even though things might appear to be slowing down.
All right. Gents, let us get into more serious business. David, I want to start off with you on Sappi, with the drop in Sappi seen a few months ago. What are your valuation models saying? In fact, it's not even just a few months ago. It was just yesterday. It was down 15, 16%. That's crazy. David?
I've got no model. My model says, don't model this, just leave it alone. Yeah. And it is every time you see a good quarter and you get excited and you think they're on the mend, the next quarter comes out, that's worse. And in this case, they had, they explained the reasons why they were down. A lot had to do with tariffs and lower demand and uncertainty. But if it's not for that, they have pricing issues, they've got stock issues, they've got all kinds of issues, maintenance issues. It's nonstop. So I don't know. This is a perennial underperformer, and we've got to put it into that special basket, together with Sasfin. Which other ones were we discussing?
Aspen.
Aspen just always disappoint. Yeah. So
Steven Saar doesn't seem to think it's going to disappoint because he's buying shares in Aspen. But okay. In terms of Sappi, the paper market, I mean, Devin, yesterday we saw Sappi down 15, 16%. But Mondi actually also released an update, and they seem to be, I don't know, they said the same things about the macroeconomic environment. But I don't know, to me it seemed that the things that they were doing internally maybe put them on a better footing. What was your reading of that?
Yeah, look, I mean, this market, as Dave was saying, is incredibly tough. There's so many factors beyond these companies' controls, whether it's the global price of pulp or energy or demand, and then they've got maintenance and everything on top of that. So, yeah, they inherently volatile at the best of times. And I think it kind of all just came together for Sappi in the last quarter, and yeah, market was justifiably disappointed. Mm-hmm. I think Mondi, possibly, if you look at their portfolio, with the packaging and the paper and the cardboards and that, maybe a little bit more diversified, so they're able to weather some of those cycles a bit better. And yeah, historically, I'd say they probably have been able to implement a bit better. So yeah, it's a tough old place. The products are needed. We're all ordering more and more online, and they supply a lot into that. So yeah, I think kind of summing up what I'm saying, is I don't envy the management teams of either of these businesses, and probably doing the best in the circumstances.
Yeah. All right.
Yeah,
Well,
I've got to add something
yeah.
to that.
Yeah.
We all got Mondi because it was unbundled out of Anglo-American, and we've had it for decades now and still losing money. It just
Ooh,
goes nowhere. It
ouch.
just bumbles along sideways. I think for the last 3-4 years or 5, I don't know how many years,
Yeah.
gone sideways, and we always. We're always trying to, oh, this is a good business doing everything, but
Yeah.
we just don't make money out of it. I'm
Okay.
looking for businesses where we're going to make money. So we
That's
haven't picked
interesting.
up, I don't know, maybe Boxer, yeah, so far, but so
Yeah.
far we've got 2 strikes or 3, how many?
Yeah.
Yeah,
Okay. That's
we're
interesting.
not doing well.
Okay, that's interesting. Well, David, sticking with you, there's a question here on Advotech versus Stadio. Please, can
Are
you,
you saying David or Devin?
David? David,
Okay,
yeah.
it's like
I
David.
must come up with new names for you when both of you are here. Advotech and Stadio. So, what you
Yeah.
think of these two shares and why they have such a big difference in PE? How can this be justified, or is this an opportunity? So they go on.
You're saying that Advotech's got a lower PE,
Yeah.
and
So
it's a very
yes,
good business. But
Advotech with a lower
Stadia and
PE.
both,
Yeah.
yeah, both of them are coming right now. When they first Stadia obviously came out of Curo, and it's proving to be a pretty good business, showing that people will pay for education. Of course, they had to create the schools, build the schools, buy the schools. Advocate's done it as well, and also Advotech's got another angle, to its education, which also gives it very good returns. Those are the kind of courses that people do. On history, I'd go for Advotech, but they're
Okay.
not bad businesses. All of those are doing pretty well. But I think, again, if it came to a choice, I would stick to the winner, the better one, which I think is Advotech.
Okay. Advotech Stadio. Where would you see more opportunity, Devin?
It's a tough one. I echo Dave's sentiments is that these are both quality businesses and really filling a gap left, unfortunately, by the low quality of public education. I think if you look at the Advotech portfolio, it's the schools as well as tertiary, which is where Stadio plays in as well, and some resourcing, but that's not big for them. I think you've got a very, very compelling portfolio of brands. I mean, the likes of the Crawfords, the Vegas, there's just so many. So I like them both. I think if you had to push me on a valuation basis, I think Advotech probably noses ahead as well.
Yeah.
But yeah, I'm very, very comfortable deploying capital into both.
All right. I'm not going to ask about Curo. Mark Dudoy chose that as his stock pick yesterday, and he gave a case for that. Let's get into liquefied natural gas and liquid helium. Renergen. A respectable analyst picked this counter yesterday. She actually did say a disclaimer that it's a speculative pick. Is the share or business tracking international prices, or is there black smoke at the end of its gas pipes? David, Renergen.
I like Steph. I've been down to the plant. This is going to require a lot of love and a lot of money. And it's a difficult business. If you saw the operation, and they've only got a small plant at the moment, they have to increase that dramatically in order to get volumes that make this business viable. And in order to do that, they're going to have to raise huge amounts of money. It's an exploration company. And I've always said that this is a business that should be sold to a big player if they could do so. So at the moment, it's 5-star speculative. It's really a massive gamble, despite Steph's passion for the business and so on. I just, I don't need that in my life. Maybe if you're just starting out in school, just come out of school or our varsity, and you want to take a long bet on this. But time's running out for me. I can't afford to take these kind of bets.
Yo, they said do what you love and you won't work a day in your life, but Stefano Marani is working every day. Devin, is this a good buy at 7 Rand, Renergen?
So Nancy, I don't know. I mean, the health warning is wholly appropriate here. I mean,
Yeah.
you know, the stock is volatile. They've also had legal battles. I think they last couple of days they did have a bit of a legal win. So
Yes.
that helps. But this is a cash hungry monster, and yeah, they really have to get those volumes up if this thing's going to be sustainable. And for me, there's just not enough evidence that that's going to happen yet. It may.
Yeah.
But you're going to be in for a bumpy ride, I'll say that.
Yeah. All right. I think, let me just check how many minutes we have before the stock pick. Stock picks, okay. All right. Well, we can get to those stock picks. Oh, no, we have 5 minutes still. Okay, so maybe I can squeeze in one more question. Let's actually talk about Aspen. David, you said it is in your box of do not touch.
I've got no issues against management. I like the management. I've always liked the business, but the shocks that we get, and this latest shock is a worry. It's a deep worry. We haven't even been able to quantify it at the moment. They entered into a contract where they didn't quite understand the terms, and this is going to be very costly for them. But it's just a series of issues that they face all the time, that has taken this company down. And yet, if you look at their facilities, you look at what they can manufacture, it's a very good business, but it just doesn't deliver. And, with a share now at a multi-year low, I would just avoid. I've got, it's what worried me is that they haven't bounced back from that collapse. When they fell back to where they're now, 180 and 120 Rand, there was a little bit of a 6% bounce, and now it's just going down and down, which shows you that there's still a lot of concerns by shareholders. I know that Stephen Saad has come in and bought 100 million Rands worth. He thinks that, maybe it's a show of good faith, but he needs to get other people to believe that, there is a recovery. And I think we've got to understand the problem more fully before we make a commitment, say, okay, they can overcome this. But at the moment, it doesn't look good.
Yeah, actually, that's what I was going to ask. Before the results come out, Devin, is this just a wait-and-see game?
I think it has to be at best. What Dave's saying is that the investor community has really lost confidence in this company just because of these surprises that seem to creep up every now and then. And I think that's going to take a long time for that management team to get back. And I think, the purchase by Stephen Saad of shares is trying to shore up that confidence. But, once bitten, twice shy. And it's going to, my sense is it's going to be a long road to really get the investor community confidence back into the stock. And, investing in what is, on paper, a very good business, but just been plagued with these issues that don't seem to go away, unfortunately.
All right. Well, what have you put your confidence in, David? Your stock pick for today?
With Mr. Trump now reducing tariffs, I think you could buy anything. But I think the one company I like that's going to benefit is Walmart. They made a beeline for Mr. Trump together with Home Depot and Costco and Target and said, you continue with these tariffs, we've got nothing on our shelves. So I think the good news is that Walmart's going to have something goods on their shelves again. And I like the business. I like the business because it does focus very much on a bit of a squeezed consumer, even before tariffs came in. Okay. So I think it's just one choice, I think, that's going to benefit from if tariffs are dramatically reduced from China, which I think they will be. Okay. So, and a good business even without that.
All right. Devin, what are you hanging your hat on today?
David went to the US. I'm going to go the other side of the negotiating table into China. There's a sportswear retailer called Enter Sports there. It's not as well known as the bigger brands like Nike and Adidas, but it is actually the third largest sports manufacturer in the world. Got some well-known brands like Salomon, Wilson, Fila, and the like. And it really is dominant in the Chinese domestic market, about 23% market share there. Got great margins, huge e-commerce platform that drives about a third of their sales. as well as, a huge brick and mortar store network. So yeah, it's financially in good shape, no real debt to speak of. And I think this is an elegant way to capture the recovery of the Chinese consumer.
All right. Well, thanks so much for your time, gents, and all the laughs and all the information and analysis. We really, really appreciate it. Thanks to my guests, David Shapiro from Sasfin Securities and Devin Shutte from the Rebay Group. Do remember that Stockwatch pre-records on a Monday and Wednesday at 1 p.m. and is live at 6:30 p.m. on a Tuesday and Thursday, while Stockwatch this week is live at 12:30 p.m. on Fridays. Keep that in mind and keep sending your questions. For now, that's all from Stockwatch this week, but do stay tuned for lots more coming up right here on Business Day TV.